In this video, we are going to look at 3 powerful growth stocks that could potentially make you rich over the long term. These are companies operating at the center of massive global trends that are reshaping industries, economies, and consumer behavior. One is building the future of electric transportation. Another is quietly becoming one of the most important renewable energy companies on the planet. And the third sits at the center of the global payment system, processing trillions of dollars every year. These are not speculative hype stocks. These are businesses with real scale, real competitive advantages, and long runways for growth that could compound shareholder wealth for years. Hit the like button, share the video, and leave your thoughts in the comments. Subscribe to the channel so you don't miss out on the next important financial investing update. Remember to do your own research before you invest in any stock. Let's start with the first company, Rivian, ticker symbol RIVN. Rivian is one of the most fascinating companies in the electric vehicle revolution because it is not simply trying to build another car company. Rivian is attempting to redefine what an electric vehicle brand can look like by focusing on a unique niche that traditional automakers historically overlooked. While many EV manufacturers focus on mass-market sedans or compact cars, Rivian targeted adventure-oriented electric trucks and SUVs. That decision gave the company a distinct identity in the EV market. Its flagship vehicles, the R1T electric pickup truck and the R1S electric SUV, are designed specifically for outdoor enthusiasts and consumers who want both performance and sustainability. But the story around Rivian goes far beyond just selling vehicles. The real significance of Rivian is that it is positioning itself as a long-term technology platform for electric mobility. Electric vehicles represent one of the largest industrial transitions in modern history. Governments around the world are pushing for lower emissions. Consumers are becoming increasingly aware of environmental impact, and battery technology continues improving year after year. These trends are pushing the entire transportation industry toward electrification. Rivian's strategy focuses on building highly capable electric trucks and SUVs that appeal to customers who want both durability and advanced technology. The company invested heavily in vehicle architecture, battery systems, and software integration. One of the key advantages Rivian has built is its vertically integrated approach to vehicle design. Instead of relying heavily on external suppliers for core technologies, Rivian developed much of its platform internally. This allows the company to control important aspects of performance, range, and user experience. Another major growth driver for Rivian comes from its commercial vehicle segment. Rivian has secured a large order agreement to produce electric delivery vans. These vehicles are designed to help companies transition their delivery fleets away from gasoline-powered vehicles. Commercial fleet electrification could become a massive opportunity over the next decade. Companies are under increasing pressure to reduce emissions and operating costs. Electric delivery vehicles can lower fuel expenses while helping organizations meet sustainability targets. If Rivian successfully scales production in the commercial segment, it could unlock an entirely new revenue stream that goes far beyond consumer vehicles. Financially, Rivian is still in the early stages of its growth journey. The company has been investing heavily in manufacturing capacity, research and development, and supply chain infrastructure. That means profitability may take time. But that is often the case for companies attempting to build large-scale manufacturing businesses from the ground up. What matters more for long-term investors is whether Rivian can establish a recognizable brand, scale production efficiently, and continue improving its technology platform. From my perspective, Rivian's brand positioning is one of its most interesting assets. The company is not trying to compete directly with every other automaker. Instead, it built a lifestyle brand around adventure, sustainability, and high-performance electric vehicles. That brand identity resonates strongly with a specific type of consumer, and in the automotive industry, brand loyalty can be incredibly powerful. Another factor worth watching is Rivian's software capabilities. Modern vehicles are becoming increasingly defined by software rather than mechanical components. Vehicle operating systems, driver assistance features, battery management software, and connectivity platforms are all becoming essential components of the driving experience. Rivian designed its vehicles with software integration at the core. Over time, software-driven features and updates could become a meaningful part of its value proposition. If Rivian executes its strategy successfully, it could become a major player in both consumer electric vehicles and commercial fleet electrification. Of course, investing in a young automaker carries risk. Manufacturing scale, supply chain management, and capital requirements all present challenges. But when investors look for companies that could potentially deliver outsized returns over the next decade, they often look for businesses operating in industries undergoing major transformation. Electric vehicles are clearly one of those industries, and Rivian is one of the companies attempting to shape what that future looks like. This video is brought to you by Value Stocks Investing Master Course. If you're looking to grow your wealth by investing in solid, undervalued stocks but not sure where to start, I created the Value Stocks Investing Master Course to teach you how to identify great companies, make smart investment decisions, and build a portfolio that lasts. Click the link in the description and pinned comments to get the course today and take control of your financial future. Now let's move on to the second company, NextEra Energy, ticker symbol NEE. If Rivian represents the future of transportation, NextEra Energy represents the future of energy itself. NextEra Energy is one of the largest electric utilities in the United States, but it is also one of the most important renewable energy developers in the world. For decades, energy production relied heavily on fossil fuels such as coal and natural gas. But over the past several years, the global energy landscape has been shifting rapidly. Governments, corporations, and consumers are all pushing for cleaner sources of electricity. Renewable energy technologies such as wind and solar power have become increasingly cost-competitive with traditional energy generation, and companies like NextEra Energy are positioned directly at the center of that transformation. NextEra operates two major business segments. The first is its regulated utility business, which provides electricity to millions of customers. The second is its renewable energy development arm, which builds and operates large-scale wind and solar projects. The combination of these two businesses gives NextEra a powerful advantage. The regulated utility segment provides stable and predictable cash flow. Meanwhile, the renewable energy segment offers long-term growth potential as demand for clean electricity continues rising. One of the reasons NextEra stands out in the energy sector is its early investment in renewable energy infrastructure. Long before renewable energy became a global priority, NextEra was already building wind farms and solar facilities. That early start allowed the company to accumulate extensive expertise in project development, energy storage, and grid integration. As a result, NextEra is now one of the largest producers of wind and solar energy in the world. But the long-term opportunity goes beyond simply generating electricity. The electrification of the global economy is accelerating. Electric vehicles require charging infrastructure. Data centers require massive amounts of power. Artificial intelligence workloads require reliable energy supplies. All of these trends increase demand for electricity. And if that electricity is expected to come from cleaner sources, companies like NextEra become even more important. From my perspective, one of the most attractive features of NextEra Energy is its combination of stability and growth. Many renewable energy startups focus exclusively on building new projects and often face financial volatility. NextEra, on the other hand, benefits from the predictable revenue streams associated with regulated utilities. That stability allows the company to invest aggressively in new renewable projects while still maintaining financial discipline. Another important factor is scale. Building large-scale renewable energy infrastructure requires significant capital and operational expertise. NextEra has both. The company's size allows it to develop projects efficiently, negotiate favorable equipment contracts, and access capital markets to fund expansion. This scale advantage makes it difficult for smaller competitors to catch up. Investors who look for companies capable of delivering steady long-term returns often gravitate toward businesses that combine reliable cash flow with structural growth trends. NextEra Energy fits that description extremely well. NextEra represents one of the most important transformations happening in the global economy right now. The transition from traditional fossil fuel energy toward cleaner and more sustainable power generation. Energy demand continues to grow every year. As populations increase and economies expand, the world requires more electricity to power homes, transportation systems, manufacturing facilities, and increasingly large digital infrastructure, such as cloud computing and artificial intelligence data centers. But the source of that electricity is changing. Renewable energy technologies such as wind and solar have improved dramatically in efficiency and cost over the past 2 decades. At the same time, environmental concerns and government policies are accelerating the shift toward cleaner power generation. NextEra Energy has been positioning itself for this transition for a very long time. Through its renewable development business, the company builds and operates large-scale wind and solar energy projects across multiple regions. These projects are often backed by long-term power purchase agreements with utilities and corporate customers. That means once a project is built, it can generate steady revenue for many years. This is one of the most attractive aspects of the renewable energy business model. After the upfront construction costs, operating expenses are relatively predictable, and the electricity generated can be sold under long-term contracts. That structure creates visibility into future cash flows. NextEra Energy's renewable energy pipeline is massive. The company continues to develop new projects that expand its generation capacity year after year. Wind farms, solar installations, and battery storage systems are all becoming critical components of the modern energy grid. Energy storage, in particular, is an area that could dramatically expand the importance of companies like NextEra. One of the traditional challenges with renewable energy is intermittency. Wind does not always blow, and the sun does not always shine. Battery storage technology allows energy generated during peak production periods to be stored and used later. NextEra has been investing heavily in energy storage solutions alongside its renewable generation assets. This integrated approach helps stabilize the energy supply while increasing the efficiency of renewable power systems. Another powerful growth driver comes from corporate demand for clean electricity. Many large corporations have committed to reducing their carbon footprints. In order to meet these commitments, companies often sign long-term agreements with renewable energy providers to power their operations. NextEra is one of the companies capable of delivering that large-scale renewable capacity. From my perspective, what makes NextEra Energy so interesting is that it sits at the intersection of two powerful forces. First, electricity demand is rising due to technological expansion and economic development. Second, the global energy system is shifting toward cleaner sources. When a company is positioned at the intersection of two massive trends, the long-term opportunity can be enormous. NextEra also benefits from a reputation for disciplined management and consistent execution. Utilities are not known for dramatic growth stories, but NextEra has managed to deliver steady earnings expansion while continuing to invest in renewable energy projects that position the company for the future. That combination of stability and growth potential is extremely rare. For long-term investors, companies that can grow while maintaining financial stability often become powerful compounding machines over time. NextEra Energy may not produce explosive short-term returns like some early-stage technology companies, but its consistent growth, strong balance sheet, and leadership in renewable energy development make it one of the most reliable long-term growth stories in the energy sector. Now let us move to the third and final company on this list, Visa, ticker symbol V. Visa is one of the most powerful financial technology companies in the world, and yet many investors still underestimate just how dominant its position really is. The company sits at the center of the global digital payments network. Every time someone uses a card to make a purchase, whether it is online or in a physical store, there is a good chance that transaction is traveling through Visa's network. Visa does not issue credit cards or lend money directly to consumers. Instead, the company operates the infrastructure that connects banks, merchants, and financial institutions around the world. Think of Visa as the highway system for digital payments. Whenever money moves through that highway, Visa collects a small transaction fee. Now imagine billions of transactions happening every single day across the globe. That is the scale at which Visa operates. The beauty of Visa's business model lies in its scalability. Once the network infrastructure is built, each additional transaction that flows through the system generates revenue with relatively low incremental cost. That creates extremely high operating margins and strong cash flow generation. But what really makes Visa such a powerful long-term investment is the global shift away from cash. For decades, physical cash dominated everyday transactions in many parts of the world. But digital payments have been growing rapidly as consumers adopt credit cards, debit cards, mobile wallets, and contactless payment technologies. Every time a consumer replaces a cash transaction with a digital payment, companies like Visa benefit. And that transition is still far from complete. In many developing economies, a significant percentage of transactions still occur in cash. As financial infrastructure improves and mobile banking becomes more widespread, millions of people are entering the digital financial system for the first time. That creates enormous growth potential for global payment networks. Another important factor supporting Visa's growth is the rise of e-commerce. Online shopping requires digital payment methods. As global e-commerce continues expanding, the volume of digital transactions flowing through payment networks also increases. Visa has also been investing in technology that enables new forms of payments. Contactless payments allow consumers to complete transactions simply by tapping their cards or mobile devices. Digital wallets integrate payment capabilities directly into smartphones and wearable devices. Visa's network supports many of these emerging payment technologies. From my perspective, Visa represents one of the most powerful economic toll booths ever created. The company does not need to predict which merchants will succeed or which products consumers will buy. It simply facilitates the transaction and collects a small fee. That fee-based model allows Visa to benefit from overall economic activity rather than relying on any single industry. Another reason Visa has maintained its dominance is its massive network effect. Merchants accept Visa because consumers use it. Consumers use Visa because merchants accept it. This self-reinforcing cycle makes it extremely difficult for new competitors to replicate Visa's global network. Even large financial technology startups struggle to compete directly with a payment network that already connects thousands of financial institutions and millions of merchants worldwide. Now that we have walked through each company individually, let us step back and look at the bigger picture. When investors talk about growth stocks that could make you rich over the long term, what they are really searching for are businesses that sit at the center of massive global trends. These are companies that do not just participate in economic growth, they benefit from structural changes that reshape entire industries. Rivian, NextEra Energy, and Visa all operate within industries undergoing profound transformation. Transportation is shifting toward electrification. Energy generation is shifting toward renewable power. Payments are shifting toward digital transactions. Each of these transitions could continue unfolding for decades. Let us start by comparing the long-term potential of Rivian. The automotive industry is one of the largest industries in the world. For more than a century, gasoline-powered vehicles dominated global transportation. But today, the entire sector is undergoing a historic shift toward electric mobility. Electric vehicles offer lower emissions, improved efficiency, and increasingly competitive costs as battery technology advances. Governments across the world are encouraging EV adoption through regulations, incentives, and infrastructure investments. Rivian is attempting to capture a meaningful share of this transformation by focusing on electric trucks and SUVs. This market segment is particularly interesting because pickup trucks and sport utility vehicles represent some of the most popular vehicle categories in North America. These vehicles are often used for outdoor activities, towing, and heavy-duty transportation. By designing electric vehicles that combine performance, durability, and environmental sustainability, Rivian is targeting customers who want capability without sacrificing technology. But the opportunity goes beyond individual consumers. Commercial fleet electrification could become one of the largest growth drivers in the transportation sector. Companies that operate delivery fleets are under pressure to reduce emissions while lowering operating costs. Electric vehicles can reduce fuel expenses and maintenance costs over time. Rivian's electric delivery van platform is designed specifically for these types of commercial applications. If the company successfully scales production and continues improving its technology, it could become a significant supplier of electric vehicles for logistics and delivery services. Of course, manufacturing vehicles is extremely capital-intensive. Automotive companies must manage supply chains, production facilities, quality control systems, and distribution networks. These challenges make the industry highly competitive, but when investors evaluate long-term opportunities, they often look for companies that operate in industries where massive change is underway. Electric transportation clearly fits that description. Now let us shift back to NextEra Energy. If Rivian represents the future of transportation, NextEra Energy represents the future of power generation. Energy is the foundation of every modern economy. Homes, factories, hospitals, data centers, and transportation networks all depend on reliable electricity. For most of the 20th century, that electricity came primarily from fossil fuels. But the energy system is changing. Wind and solar power have become increasingly cost-effective. Governments are implementing policies designed to accelerate the transition toward cleaner energy sources, and corporations are committing to sustainability targets that require large amounts of renewable electricity. NextEra Energy sits directly at the center of this transformation. Through its renewable energy business, the company develops large-scale wind farms, solar facilities, and battery storage systems. These projects provide electricity to utilities, corporations, and regional power grids. One of the reasons renewable energy has become so important is the declining cost of technology. Solar panels, wind turbines, and battery storage systems have all experienced significant cost reductions over time. As these technologies become cheaper and more efficient, renewable energy becomes more competitive with traditional power sources. NextEra has spent years building expertise in developing and operating renewable energy projects. This experience allows the company to manage large-scale infrastructure projects efficiently while maintaining strong financial discipline. Another important factor is the electrification of other sectors of the economy. Electric vehicles require charging infrastructure. Industrial processes are becoming more electrified. Artificial intelligence data centers consume enormous amounts of electricity. All of these trends increase overall demand for power. If that power is expected to come from cleaner sources, renewable energy companies become increasingly important. NextEra Energy benefits from this dynamic. The company combines stable utility operations with a rapidly expanding renewable energy development pipeline. That combination provides both predictable income and long-term growth potential. Investors who look for businesses capable of compounding value over time often appreciate companies with this type of balance. Now let us return to Visa. Visa may not build vehicles or power plants, but its position in the global financial system is just as powerful. Every year, trillions of dollars move through Visa's payment network. Whenever consumers use cards, digital wallets, or contactless payment systems, there is a strong possibility that the transaction travels through Visa's infrastructure. This network effect is one of the company's greatest strengths. Financial institutions connect to Visa because merchants accept it. Merchants accept it because consumers trust it. Consumers trust it because it works almost everywhere. That cycle reinforces itself. Once a payment network reaches global scale, it becomes extremely difficult for competitors to replicate. Visa has spent decades building relationships with banks, merchants, and financial institutions around the world. That infrastructure allows the company to process transactions quickly, securely, and reliably. Another important growth driver for Visa is the continued expansion of digital commerce. Online shopping requires electronic payment systems. As e-commerce grows, the number of digital transactions increases. Mobile payments are also expanding rapidly. Smartphones now allow consumers to store payment credentials digitally and complete purchases with a simple tap or scan. Visa's network supports many of these emerging payment technologies. From an investment perspective, Visa benefits from a powerful economic model. Every time a transaction moves through its network, the company collects a small fee. Those fees may appear tiny on an individual transaction, but when billions of transactions occur daily across the globe, the cumulative revenue becomes enormous. And because Visa does not bear the credit risk associated with lending, it can focus on operating its network efficiently while generating strong profit margins. Now let us compare the three companies from a portfolio perspective. Rivian offers exposure to the electrification of transportation. NextEra Energy offers exposure to the transition toward renewable electricity. Visa offers exposure to the digital transformation of payments. These trends are not short-term market cycles. They represent structural shifts in how the global economy functions. Investors who identify companies positioned at the center of these shifts can sometimes benefit from long periods of sustained growth. Of course, no investment is guaranteed. Each company faces challenges. Rivian must prove it can scale manufacturing efficiently and manage the costs associated with producing electric vehicles. NextEra Energy must continue expanding its renewable energy pipeline while navigating regulatory environments and infrastructure investments. Visa must maintain its dominance in a rapidly evolving financial technology landscape. Understanding these risks is part of responsible investing, but when evaluating long-term growth opportunities, investors often focus on companies that combine strong competitive advantages with powerful industry trends. Rivian's focus on electric vehicles, NextEra Energy's leadership in renewable power, Visa's global payments network. These advantages give each company a unique position within its industry. For patient investors who believe in these long-term trends, holding businesses like these over many years could potentially lead to significant wealth creation. If you want exclusive stock tips, in-depth analysis, real-time trade alerts, and free investing guides, join the Stocks Galore Patreon today and take your investing game to the next level. Our members get full in-depth analysis on most of the stocks mentioned here. Head over to patreon.com/stocksgalore and become part of our growing community of smart investors. Link is in the description. Now I want to hear from you. Which of these companies do you believe has the strongest long-term advantage? Do you think Rivian has the biggest growth potential as electric vehicles become more common? Do you believe NextEra Energy will benefit the most from the global transition toward renewable power? Or do you think Visa's dominance in digital payments makes it the strongest long-term investment? Let me know your thoughts in the comments. Do not forget to like the video, share your thoughts in the comments, and subscribe so you do not miss the next important investing update. Thanks for watching, and I will see you in the next one.